Property up, property down. People, media love talking about where the market is at the moment. But the big question is, how do you spot the bottom of the property market? Stay tuned.
I'm the ringleader, so listen up.
Good morning.
Good morning, Miss Brala. How are you today?
Yes, I'm very well, thank you. And how are you?
Very well, thank you, Miss Brala.
So formal. Really interesting topic this morning, Mark. What does the bottom of the property market look like, given that all we're hearing in the media is doom and gloom? We've got a rental property crisis. We've seen house prices falling faster than they ever have before, coupled with expected rising interest rates. We're hearing all of this negativity. It's published absolutely everywhere. But what we're seeing in the real estate industry around the Northern Beaches is very, very different. It's interesting.
It's and look, it's something that I really like about this. I don't sound like I'm always a positive real estate agent, and I don't like to talk about negative parts of the market. But at the end of the day, we're 10 or 20% back in pricing, right? It kills me to say that, we just are. Something that gives me a lot of reprieve with that fact is it's purely at the hands of the Reserve Bank, the government, right? So if the property market was on a downward spiral and I didn't know why or how, I would sort of be shitting the bed a little bit.
Yeah, absolutely.
But I sort of feel like we're in the hands of, it was at the hands of the government, the Reserve Bank. That's what caused the property market to correct.
Yep.
They wanted that to happen on the back of inflation. And I feel like we're sort of in, it probably sounds really cheesy, but I sort of feel like we're in good hands.
Starting to level out. Well, I mean, the peak of the market was in 2021, right? And property prices were
Fact.
astronomical and very unattainable for a lot of people.
Fact.
Fact, yeah. So was that sustainable? Prices can't remain that high forever. It's just not sustainable for the economy, for anybody trying to enter the property market at all. So it was always going to come down at some point.
Well, they probably let it run and rally for too long, but they're in the middle of bloody COVID.
Yeah.
So they didn't want to throw the handbrake up in the middle of a shitstorm.
Yeah. You're right. It was a hard time for a lot of people. We couldn't do anything. So that was the peak of the market. And now what we're seeing is things are starting to dramatically change. It's happening whether we like it or not. Some people think it's happening faster than others, but it's real, it's raw, it's happening. Are we in the bottom of the market now, do you think, Mark?
Well, I'm just going to bring this up to show you guys. I'm happy to use anyone. If anyone wants to throw me this morning a suburb, I'll give you the data on the suburb. But I want you to think about this, and no one has access or is showing, not a lot of people have access to this information I'm going to talk about, and no one is actually using a long-term approach. The fact is, people remember pain a lot more clearer than gain. So before I show you the graph, which I know Lisa Novak hates data and hates graph, but I think it's really important. Do you want to explain to us what we're talking about? Explain to everyone watching today what we're talking about with that, getting out of level 1, getting out of level 20 property market sort of thing?
Certainly. So Mark was explaining it in really simple layman's terms to me. When you think about entering the property market, let's think about it as like you're entering a lift and you want to get to the penthouse level, level 20. So absolutely everybody enters level 1, and no matter what you do, the lift will rise and it will fall. So you might get out at level 20, absolutely great for you, but everybody wants to do that. Or you might get out at level 15. So you've entered at level 1. So long as you're leaving the lift higher than you entered the lift, you're in a really good place. Alternately, what could happen is you might stay in the lift for a little bit too long. You'll get to level 20, and then what does the lift do? The lift comes back down. So it's all about timing. Timing is absolutely key within the property market, within that lift ride.
And that's what people have, and we were being pretty positive about the numbers. We had an open house yesterday, which was a 2-bedroom unit that had 23 people through on a Wednesday. And the conversation with some of the members of the sales team is like, it was the top of the property market like a month ago, because a month ago we were getting 1 or 2 people through the same property. Yeah. Now we're getting shitloads through the same property. So have we just passed the bottom of the market, number one? And number two, when we spoke about that this morning, you were saying, yes, but people are just like, rates, shittiness, inflation, shittiness, maybe we should still wait. But I think we could have technically just passed the bottom of the market, because numbers on sales open houses have officially exploded. Not for 1 week, not for 2 weeks, but 3 weeks now. We have been getting explosive numbers through all of our open houses. Lots of good offers being accepted, strong offers being accepted. And we're looking back saying, shit, maybe that last quarter of the year, last year was the bottom. I'm going to come back to what you just said about the
lift.
The lift, because it's going to relate back to this. But I want to show everyone this.
All right, so we've got a graph. Now, what suburb are we looking at? DY?
DY.
DY.
So DY is good because there's 600. Starts at 2012.
Okay. So you can see where we start at 2012 and just the peaks and troughs in that graph.
Yeah. So there's a correction there. If you look at the end, there's a correction. Whoa.
No, I can't see.
There's a correction in that, and the correction is the property market in the last 10 years has done 80% growth in DY 4 units.
Yeah, crazy. Those numbers are just astronomical. 80% growth, 80.
80.
Yeah.
So with the market going up, with the market going down, there's 80% growth in the property market. Now, what I want everyone to think about today, and what I want to leave off on today, is over a 10-year period, if the property market has done 200%, it's doubled and then doubled again. Over a 10-year period, if the property market has done 50%, it's only gone up half on its original value. I want you to remember, in the last 50 and the last 100 years, the property market has doubled on average every 7 to 10 years, depending on if you compound it or not. Why I say that is I think about double is normal. It certainly has been the last 50 years, and I think it certainly will be the next 50 years. But when you're timing where we are in the Australian, the Sydney, the Northern Beaches, wherever you are, the property market, I want you to remember, if it's overcooked, it's at 120, 140, 160%. If it's undercooked on a 10-year average, it's sitting at 50, 60, 70, 80%. So when I look at suburbs like DY and I see that the market's done 80%, which is, you can't read it, but that's the green number down here. You can see it's corrected downwards. I would say we are on point for a normal property market. We could be probably now officially at the bottom of the next cycle. Furthermore, I'm going to give you furthermore, but wait.
I love it.
If I give you a big suburb that has lots of sales of houses, like French's Forest,
Yep.
it's a similar graph.
It's very similar. Yep. You can see where the big market was.
Yep.
Yeah.
But furthermore, the growth that's had is 115%.
Okay.
Compared to 80.
Yeah, compared to 80, yeah.
Okay. So, why am I throwing all these numbers at you? I want everyone to remember today, the property market doubles every 10 years. If it's more than that, worry. If it's under that, cheer, because it's on point. Do you know what I mean? It gets sort of undercooked. It's ready to cook some more. So houses have overcooked. Units have undercooked. That's where we are in the property market.
That's where we are in the property market. I feel like that was just a perfect note to leave it on.
Dude, is that like the mic drop moment?
It really was. Undercooked, overcooked, choose your steak medium rare, enter that lift on level 1 and leave before it hits 20.
Do you want to do the mic drop and we'll roll out on that?
Mike.